Sure. From a fundamental standpoint, if you have, anything longer, I think, than a 1.5 month horizon, I'd be selling the market here. You might be able to sell a little higher because I do think we're going to set an all-time high probably by April, but that's being cute. Longer term, I think we have several issues, and that is that here or at an all-time high, the market's almost priced for perfection. It's assuming continued good news, and I think that anytime you're in that situation, it's just much more likely that bad things are going to happen than good things are going to happen. I think we have real reason to fear that right now. While the corporate profits were excellent in this last quarter, we see that companies are not spending on growth. And what that means is it's going to be very hard for them to sustain the kind of growth rates that are implied by the valuations of stocks when the S&P 500 is at an all-time high. And so the likelihood in 2013, I think, is for disappointment in earnings and for disappointment from the general economy. Now, what's really benefited the U.S. stock market, I think, especially in the last 6 to 12 months, has been that it is a flight to quality. So we've seen investors globally selling European stocks and bonds, emerging market stocks and bonds, commodities, really everything, and pouring it into the U.S. stock market, which is ironic because there have been many times when the U.S. stock market hasn't been seeing a flight to quality. So why has the U.S. suddenly become the place to go? Well, I think it's largely because of Ben Bernanke, who's out there basically saying, I will pump liquidity into this market, essentially ad infinitum is what we thought.
You said companies aren't spending as much, so it was based on a lower outlook for earnings, or at least not as what Wall Street expects, and growth. What are the factors that will slow that down?
Well, again, I think the fact that we're seeing no job creation going along with good corporate profits suggests to me that companies don't have a lot of confidence in the fact that consumer confidence is going to continue. And so they're not opening up new plants, opening up new product lines, the kinds of things that would give them a higher growth rate. And so that puts more pressure on their existing products and also on financial engineering in order to produce sufficient earnings. And I think that that's going to displease the market that at an all-time high is believing that the general company can earn at an accelerating rate.